Okay, here we go with the SPX. And once again, I must remind everybody this is for educational purposes only. Please do your own due diligence. Again, historical perspective on this, we put in a high on April 26th, and that was at 1220. We began to form a symmetrical triangle, and then we broke down out of that triangle decisively, traded down, flash crash day, traded back up, looking for a spot to be. Schizophrenic trading, a lot of volatility, triple digit days. It was just craziness. It still continues to be that way. We traded down and began to form a channel, as I had mentioned in prior analysis that I felt we would do, and we are now in a much narrower channel. On the top side of this, it's just slightly over 1100, and again, there's market symmetry here. We have a swing high from late February as well as early February to coincide with that, and this junk back here was a channel back here in November and December, so there was some consolidation back here which supports it as well. The low is primarily from the 5th of February that was put in at 1044. We also had this recent low on the 25th of May, and that was at 1041, so it went just slightly beyond where the February 5th low was put in. Much like the Dow in my analysis there, I feel that there is good support here, but if it breaks down, there are some places that it could go, and it might not necessarily be attractive unless you're short the market. I would be looking first at about 1025, which is the October-November. There's a double bottom. It's not an exact double bottom, but pretty close, 1025 to 1030. And then below that, we have 975 and 1000 is where I would be targeting. Interesting to note here that the 200 simple moving average is acting as resistance here as well. If we do go to the upside, 1175 would be the swing high right here. We need to respect this back here. Prior to that, that would be 1150 from this swing high and this little shelf that was put in back here in January. But then 1175 and then back up to the top at 1220, and that would be the resistance on the top side. Okay, looking then at the MACD and the stochastics, it's really not helping us too much. Very similar to what was going on in the Dow. Spent a real brief time below the 20 band on the stochastics in the oversold area. Started coming back up, and it looks like it may want to cross back over and roll over, but not too sure about that. We actually did get a MACD line cross over the signal line, came briefly up above the zero line on the histogram, but with today's action, it's brought it back down again. So we did have a retracement and a loss of momentum to the downside prior to today's action, and today was pretty decisively down. So pretty indecisive really in terms of what these indicators are telling us. There are no tells right now in either the stochastics or the MACD. I believe we're going to trade in a channel here for a while, and I will keep a very close eye on the downside and the upside as an indication of a breakout, and then we'll get further information as we go forward. Okay, we're going to move over and take a look at the comp Q.